improved immensely, I now feel as though I'm playing catch up in terms of fundamentals. And the key to being successful in this space for me is if you can stay ahead of your fundamentals, you're going to be early, very, very early into projects. Combine that with good TA for good entries and exits, it should be much simpler than what it was when you initially started. So me as a trader, I've literally gone 360. I started off in fundamentals, I got smashed. Well, I made money, I got smashed. Then I learned how to trade properly, a lot of margin trading, leverage trading, and now I've come back into the alt world because of what's happening in the alt space and DeFi. And just the way the charts are looking on a higher time frame, I think we are going to see some very strong macro bullish cycles across not just crypto, but I think globally as well. I think we will see some sort of a pullback. I wouldn't classify it as being bearish. I would classify it as
an opportunity.
a great buying opportunity.
Yeah, definitely.
Yeah, absolutely.
Bullish selling.
Because but the key, everything I do, everything I look at and trade off is all around market structure. If you can understand market structure on all time frames, it's going to make trading so much easier for you.
Yeah, this is what I was going to say. Like, this is something you taught me, like, because being able to identify market structure, even on low time frames, if you're trying to scalp.
Absolutely.
So many of our members are often asking us tips about how to scalp and what to look for. I'm personally not good, or actually not spending a lot of time scalping, especially with current states of markets. But if there is one good thing that I would say is that treat your low time frame charts the same way you would treat a H4 or D1 chart. Like market structure just tend to repeat on all time frames.
Yeah, it depends. So what is a scalp? A scalp isn't something that you hold for several hours. A scalp is something where you're in for minutes and you back out. 20, 30 points, you're in and you're back out again. That to me is the definition of a scalp. A day trade is where you may be in a position for several hours. And a swing trade is anything greater than a day, 2, 3, 4 days. And then you've got your positional trades where you're looking to scale in, you're looking to scale out, you're looking to build a position. Now, each one of these requires a certain technique when trading. Now, for absolute extremities for scalping, then obviously you're going to be counting on anything below the 1 hour, 5 minute, or 1 minute for entries. Now, a lot of traders do prefer to use market profiles, order flow, because it really helps refine the levels they want to scalp. They're always scanning the books. That is something that's out of scope for me. I've had a look at it. I've attempted it. It didn't suit me. I prefer having a more relaxed approach to trading, purely trading supply and demand. I'm not an SR person. I'm more of a supply and demand person, combined with channels, combined with oscillators eventually. So I don't share what I actually look at publicly, but behind the scenes, I have several charts, many markings of my charts. So it's about finding what works for you. And for me, like I said, what changed my game was not SR. It was more supply and demand, and then combining that with channels, trend lines, oscillators, and fib levels. That is literally all I use now.
I think we have a question very often. How do you differentiate support and resistance areas to supply and demand? Like, aren't they supposed to be most of the time aligned?
They can be. So basically, one way to potentially think about it is demand. So a demand level is an area where you often see a very strong reaction on the first retest or the second retest. You're looking for so you often see a candle, the down candle, which leads to a move up. And that is essentially where your buyers stepped in. Okay, so you would expect the second time that price comes and retests that level, you would expect a fairly good reaction off of it. Like, you wait for the reaction and then you can hop in. I'm not the type of person that often lets a level get tested and then wait for a retest to jump in. I just want to see the reaction on the books. I'm watching the books at a level, watching for the reaction, the candle formation. Is it a bullish pin bar? Is there a strong continuation candle? Then I'll probably look to jump in and combine that with the trend line. Is price in the channel? Is it a downtrending channel? Has it broken out of the channel? So these
context.
Yeah, it's all about the overall context. What price is doing at a level. Now, quite often you're going to see a lot of people, especially when they're trading Bitcoin, as soon as price shits itself, they're just going to jump in and long it. Why are you trying to catch the first test price will always consolidate, form a base, and they don't start pushing away. So one of the mistakes I used to make quite often was try to knife catch and trying to catch the perfect entry. And I'm not going to lie, I used to puke positions all the time. And then eventually 2-3 days later, price would take off and go into the direction.
Yeah,
So
exactly.
absolutely right, yeah.
This is something I've been, especially recently, as I wasn't able to be around in the group that much. But I was there when price started to roll over
Yeah,
below 9K, and there were like many members asking like, "Are you buying the dip now? Are you trying to knife match?" And I was like, even if that would be a logical area for me to do so, like I can understand why you would want to do that, but
yeah,
this is the first true kind of hardcore down move we've seen in a while, and I have no reason to try to knife catch that. At best,
absolutely.
I wouldn't matter buying at a higher level that I like. I have a plan to buy in, let's say, the 9.6 area,
Yeah,
but it won't kill me if I don't buy at 9.6 and I actually see strength off of this level back to above 10K. You don't
yeah,
have to knife catch, and
yeah.
most of the time, if you do, you most likely gonna regret it.
I'll say something and think about this when you're trading. You want to spend the least amount of time
Yeah,
in a trade setup.
yeah,
You want to be in a trade when it looks ready or almost ready to go. And quite often, it's not going to be when price is just nuked and coming to a level of support.
yeah,
If you get in early, you're going to be sat in that position. You're gonna start fidgeting. You might puke it because you think it looks bearish.
yeah.
So
And
it's all about entry and
it's all about
often
it's all
yeah,
about as you said, it's all about entry, context, and timing. And technical
correct.
analysis is supposed
Yeah,
it's not
yeah,
supposed to tell you where something is going to go. You will never know. Like
that's
everything
right.
can happen, but it's supposed to help you find timings and depending on your strategy, obviously. But this is
Yeah,
supposed to help you time your entries and
it
time
does. Yeah,
and most importantly, something that people tend to forget, it's also supposed to help you time your exits because a trade isn't shit until you actually took profit or took the
yeah.
loss actually.
So one thing I want to mention again, there's two keywords here, price and time. Look it up, understand it, what it means, and it will help your trading hopefully improve.
Yeah.
The other thing I think people don't pay attention to is, Pierre, if you just go back to the previous chart you were looking at, the previous time frame, if you just zoom into the current price action. Now, if you look at price here, we can see that we've come into the previous range high. Now, look at the candle bodies at the lower end. Wick, 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 wick. These are often what you want to see as signs of strong buying. Now, you know that you could potentially get away with having a loose stop around these lows here. And it's also the same on the upside. So quite often I'm always looking to short the market at the tops. But what am I looking for? I'm looking for good, strong rejection wicks or a series of rejection wicks. This to me is a sign of strength, and a sign of weakness inverse is when you see a lot of rejections at the highs. If you go back to 2019, yeah, and if you look at the, if you look, if yes, 2019 highs, if you go to the weekly chart, you'll see the strong rejections. And I made a point about this last year. Look at those wicks. That is not bullish. That immediately tells you that's a strong rejection,
Yeah.
hard rejection. The bigger the wicks, the stronger the rejections that repeat often, then you know the market could potentially be topping out. And same applies on the inverse as well.
Yeah, I believe this is some definitely like the most important level Bitcoin wants to
Yeah,
break on an higher time frame. It's been trying to break many times, and these rejections, damn, they're so nasty, mate. And if I
yeah,
remember correctly, this is basically the place where most of the higher time frames oscillator I'm watching and we're
yeah,
watching, we're all starting to roll over. It was the
correct. Yeah.
first time in the entire rally, and it's just beautiful. Like,
I just want to show you
yeah.
something as well. So,
Do you
as you
want
know, Pierre,
do you want to share your screen?
um, I probably better not because I've got four
Okay,
monitors, so
okay,
I'm not
okay,
sure
okay,
which one.
okay. No, no,
So
that's all right.
one thing I often use, right, which I find really impressive on Bitcoin, and it's not something I talk about openly, Pierre, you know about this, but if you go to the 3-day chart,
Yeah, but I don't have the 3-day chart because I
all right,
didn't
okay,
pay my.
no problem.
No, it's
But
okay,
if
it's okay. I
but
haven't.
before you use this, if you look at the 3-day chart, and you look at this 3-day stock RSI on Bitcoin, it really adds a lot of confluence to the highs and lows from a macro perspective. The other thing I also look at is the weekly Bollinger Bands. So you can probably bring up the weekly Bollinger Bands as well, Peter.
Yeah, I'm gonna
So
try. I have nothing. I had nothing prepared. I'm sorry, but
yes, okay. So if you look at Bitcoin here, if you look at the recent set of lows here in March, again in July, and you look at the highs, they really are key turning points. So from a macro perspective, one thing I don't want to do is trade in the opposite direction on my high time frame swing trades. You'll see how
yeah,
nicely they line up.
wow, March was actually
Yeah,
insane.
it was, yeah. So the 3 days are one of my go-tos in terms of spot plays. And you can do the same again at the recent highs. Now, I don't trade off the stock RSI, but it kind of
Yeah,
adds weight that, okay, I think 2 weeks ago I was talking about there's a TD9 on the global market, there's a TD9 on the ES on the dollar. So I think Bitcoin is due to reverse, and that's what led me to shorting more or less the top on Bitcoin, because I thought, okay, how much higher could this possibly go versus downside potential? And the stock RSI was slammed at the highs here, turning over, which gave me conviction to short because price had come into a strong level of resistance.
Yeah,
yeah,
but
that makes
also
sense. That
if you
makes
look
sense.
back in 18, that's a dangerous game as well.
It is a dangerous
Because
game.
Oh, what
It
the
is.
fuck?
or
It is.
even in 19, early 19, that was topped out for
Yeah.
Oh
So
yeah,
so,
it
so
can.
it is
Yeah,
it is a dangerous game. But what the other thing I wanted to add here, which why did I short this? Because
Mhm.
there was also a $600 premium on Bitcoin.
Right.
Now the December futures was trading at 600 premium compared to Bitcoin. The last time this happened in February, March, Bitcoin tanked. I'm not saying it's going to tank now, but when you see such a huge discrepancy between the premiums, whether that's backwardation or contango, the probability is going to be in your favor to take a
Mhm.
position in that direction or look for that reversal.
yeah,
Um, and, and lastly, something that people don't look at is price momentum. When price goes into a level with momentum, is it a slow grind into a level where people are getting extremely bullish, or is it on large volume that's really kicking over? Shorts or longs are getting liquidated and the momentum continues. That's what you want to see in terms of a strong sign that the market is looking to continue higher. You don't want to see a push up and then just there's no real momentum or shift. The orders
yeah,
that are flowing through the books are just very, very slow. That to me smells like a squeeze or just a grind to fill the. Basically, you have to understand what an iceberg is. So that's quite often what happens when icebergs get filled. You see that grind up, but it's not really kicking on. And there's a lot of hidden orders that get filled, and then obviously the market just goes bigly in the other direction.
yeah, yeah,
So
and I think you're right on that. And altcoins are showing that even better than Bitcoin. Like
yeah,
momentum on shitcoins is, in my opinion, even more important
yeah.
than on Bitcoin, mainly because they're basically Bitcoin on steroids.
In all honesty, I think alts are so much cleaner to trade.
Oh yeah, me too.
They're really nice. Price moves slowly, and the thing with altcoins is that quite often when they go very quick upwards, and it does give you a chance to take your profit as well. They don't just drop down or break down straight away.
Yeah, definitely.
So
Unless it's like a DeFi fucking farming shitcoin
yeah,
that gets hacked.
yeah. But and that's why my focus now is more altcoins and less Bitcoin trading because why do you want to trade Bitcoin when it's going sideways when you can trade a trend? You're going to make most of your money in a trending market. Guaranteed, you will make a lot of money, or you're going to lose a lot of money in a trending market. It's in a range where you're going to get chopped up, and generally in a trading year, you're going to have 1 or 2 months that will account for 80% of your yearly profits. And it's the trend where you want to capitalize on. And that's where I think the moving averages are absolutely key
Mhm.
Well,
in helping to identify the trend.
yeah, exactly. This is well, I'm mainly training not mainly. I'm mainly training off of horizontal levels, but moving
Yeah.
averages are, in my opinion, still a misused. Like it's commonly used, but misused, in my opinion, not
Yeah.
misused in the way that people are using it badly, but misused in the way that they are not they are not going to use how to say that with full potential.
Mhm.
Yeah.
One of the best example we saw recently was BNB, in my opinion.
Yeah. Yeah. Beautiful. Yeah.
Like in mid-August, I think it was August 17th, something like this. It was the first time I shared BNB on Twitter and the Aven.
Yeah.
And it was actually the first time you could see moving averages on daily time frame showing potential signs of a true reversal. Like all of
Yeah.
the time before, they were all fucked up. Like they were nothing to do.
So, question for you is: do you sometimes drop down to the 12-hour to see the cascade onto the daily? Because that's something that I often do.
Um, I no, I almost never do that.
Yeah, I'm always looking for a cascade. So if I see the shape on the higher time frame on
Oh,
the 12-hour,
oh yeah, okay.
then I know that eventually it will trickle over to the daily. So it kind of
Oh
helps
yeah.
me get into position earlier. Yeah.
Yeah, what I do, it's a lot, well, it's not exactly like you just said, but it's basically what I do in order to see that a little bit more aggressively than a cascade
Yeah.
is that I use a few shorter time frames moving exponential moving averages, like the 13 and the 25. And most of the time, they are very good short to mid-term trends indicators. When they're
Yeah.
lost, you basically want to get the fuck out, and or at least you want to tighten your shorts and get ready. Like one of the best example recently was, well, Ethereum last last time he lost was in the 400s, 440. This is
Sure. Yeah.
usually what you don't want to see, a strong move down back below these two, and they are not just hovering above, they are clearly broken and they cannot get
Absolutely.
above,
Yeah.
and you can see that that was just a perfect bearish retest here.
Yeah. So
So
another
yeah,
thing.
I think I could say that I do that.
Yeah.
But
Another
yeah,
thing I'd like to share as well for anybody watching or listening is if you can go back to the BTC chart on the weekly level. I honestly think the Bollinger Band is one of the most underutilized indicators out there.
yeah, I agree.
The more,
I think I have it that.
yeah, the more I look at it, and the more you can see that Bitcoin on a weekly time frame has almost played beautifully end to end. Deviation at the highs, deviation at the lows. There are really optimal entries and selling points if you look at that. Now, of course, you could argue that well, if you look at May 2019 prices constantly going higher, you don't want to exit a position too early, but what you do want to look for, if you look at the top of the bands where the bands start rolling over, then you know that potentially, okay, you know, you've come to a threshold in terms of price.
Yeah, yeah, exactly.
But
Well, for example, and just like every other indicators, you shouldn't blind trade off of an indicator. But for
yeah,
example, as you just said, well, with Insight, it's always easier to say, obviously, but in
of
July
course,
2019, the confluence was just insane. We had weekly stock rolling over. We had boiling BB bands at the top. We had major weekly horizontal level that we never been able to close above since the breakdown. And it's basically the same level that just got retested with the same
absolutely,
confluence.
yeah,
I'm very surprised how quickly the weekly RSI already dropped, to be honest.
yeah. I guess it does. It can sometimes do that. It just depends on the magnitude of the buying or selling.
Yeah.
Another point I want to make out is I don't think people pay attention to how much time price is spent in a range. You
Yeah.
have to understand
Yeah.
the bigger the range, the bigger the move price is going to make out of that range. And you'll see that as a classic example
Yeah.
again back to 2019. That's 4 or 5 month accumulation period was an explosive move. When you see that, when you see a range, whether it's a 4 hour, a 1 hour, a daily, or weekly, give it its respective um, credibility that it requires. So if you see prices just been ranging here in Bitcoin around the 10.3, 10.5, don't try to short it because if it breaks up, well, it has done today. It's popped up, a good $400 or $500 from yesterday. So let it break down. if you're looking for shorts. But essentially, when price is in a range and it breaks out the range, don't try to fade the first move out of a range unless it generally is a deviation and it closes back inside the range again.
Yeah, definitely.
And that's where I see a lot of people getting caught out.
Well, the other good example we had recently with the magnitude of the range, as you say, there are three good examples. We have the breakdown in 2018.
Yes.
We have the accumulation back in the bottom, and
absolutely.
I know you know that because I know we talked about it already, but the 200 weekly EMA, that was just pure porn. And the last
every time you say that.
and the last one that was very clean was this one, the May to July post halving. It wasn't clean in terms of price action because look at this, it looks like someone that is having a heart attack. But it's cleaner when you put the EMAs.
It is, yeah. As soon as price reclaimed 9.5, 9.6, that's when I just cut my short and got out of the market and just let it ride up higher.
I think, yeah. So sorry, Bagsy.
I was gonna say you accepted that it was bullish and you were able to change
bias. Yeah, you have to because you have to. I want to show you guys something about a trick. So if you can go back to the daily chart again, Pierre, or if you just focus on the key swing lows, look how price never broke structure. So if you look at the swing low in May, can you see the one where it tagged your? Yeah, look at the lows.
This is halving day.
Yeah,
by the
that's
way.
right. Yeah. So from that point onwards, we never broke market structure. Can you see that?
Yeah.
Each swing low is significantly higher. I think there was only one small fake out, but
yeah, I got stopped on that one.
Yes,
the only one. I saw someone tweet about it. I was like, "Oh, it's a good point. I'm along it." Fuck me. Never listen to Twitter, guys.
I
That's
remember
the lesson.
you had the long from 9.6 or something like this.
Fuck me.
But if you look across from May to July, those swing lows are respecting higher lows, and you can see that a lot when price is bullish. You're going to see it in such an extent. Okay, there's the odd time where you might get SFP'd or swing failed, but quite often you can literally bid the previous swing low wick within that range because you expect it would normally hold. Now this is on a higher time frame, not on a 1 hour or 50-minute. I'm talking more from a higher time frame perspective. You really can get some beautiful entries at the previous swing lows in around there, scaling in.
Yeah, and this is where I agree with that, and this is where, in my opinion, moving averages can be very helpful too, because I've seen so many people during that range that were calling for a breakout either way for 3 months, like every 2 weeks. And one of the beauty with moving averages, as we said earlier, is that it can help you find the timing when the trend has reset. And it's crystal clear when you look at this, like the difference between the structure here in moving averages and here is like, it's crystal clear that
for sure.
It's compressed as fuck and it's gonna move. The price is getting tighter.
That's right.
All the moving averages are all converging around the same pivot, the same horizontal level. That is the most important one, 9.6, 9.3.
Yes,
that was so clean.
And you're gonna see the same on a Bollinger Band.
That's what I was gonna say exactly. Like it's the exact same on a Bollinger Band.
This was the training range we had with the Haven from June to mid-July. Like,
so the lesson to take from this point is that when you see such compression around a range, you've got to be very careful because when it breaks, it's going to break big in that direction.
You don't want to fade that. You definitely don't want to fade it.
Yep.
And
so
it's a classic example of compression, expansion, compression, expansion. And this is the first time for me in a while that we've been basically fucking around with the trend, in my opinion. Like,
so my argument to Bitcoin rallying back in July, August, I think Ethereum led the way, and I think it was also helped by the fact
that for me, it's if the reason Bitcoin held that well and went to new highs was 100% altcoin driven. Like, in my opinion, altcoins and the entire decentralized finance mania, I thought it maybe not saved because it was still looking bullish, but they helped it not going back to 7K before going back to 10K.
No, I think you're right. I think you've got a valid point. It's a very valid argument. If we look back at Ethereum was often leading the move after the halving. But I would also like to add that Bitcoin was and has been very, very sensitive to the dollar. I've got some charts.
Yeah, exactly. Yeah, well, a member asked, and I was going to ask you because this is a very interesting question. And I have actually been focused on dollar and stock markets because of you. Basically, in March, April, when you told me to, it was a good thing to wait. And it's so clean. Look at this. This is a chart I shared last week. It's crystal clear. It's beautiful. It's like
so. Another thing you can do is look at Euro USD. So you have to understand the dollar index is an average weighting of currencies. And the euro makes, I think it's up to 56 or 58% of the dollar. So if you look at the Euro USD, it's almost the identical but inverse of the dollar. And this is
this is the resistance. Well,
correct. Yeah. Now, when you overlay Bitcoin, you'll see that Bitcoin followed the euro. Bitcoin topped at the same point at 12s at the same time that euro did, and the market came down. And euro did the same thing as well, more or less the same dates.
Yeah. Okay. Yeah.
You'll see the moves up and you'll see the moves back down again.
I just broke my chart.
Yeah. So that's why I'm convinced correlations aren't always there, but when they are, you have to notice them.
Look at this.
Yeah.
Like, something I've noticed is that legacy markets and forex, they seem to be even more moving averages driven than crypto.
They are. They're very
they are. It's insane. Like the stock market, the US stock market, it's absurd. Like, especially on higher time frames, which makes sense because the higher the time frame, the more accurate the average value. Because this is math. The more you have data, the more accurate the average. But look at this. It's like. Yeah. And you know what? This is what I wanted to say about moving averages. So many people tend to forget what is a fucking average. Like this, don't overcomplicate it. It's math. Like,
I have to say that when price breaks below, especially in Bitcoin, when price breaks below the 200 weekly moving average, it's an absolutely brilliant buying opportunity because it very rarely ever spends any time below the 200 weekly moving average.
Like, look at this. This is
especially on a first test.
Here.
Now, what I'm looking for personally, and this isn't me being bearish, but this is me being bullish. I'm looking for that retest on the 200 weekly moving average because if there's a level I'm looking at, which is 7.1, and there's 5 reasons why I want to buy that level. First of all, you've got a high volume node there. Okay. Secondly, it's a yearly open level. Thirdly, it's the 0.618 to 0.705 fib retracement level. Fourthly, you've got a 200 weekly moving average at 65, 68s. So for me, if price does come back down into that region, it's an absolute brilliant buying opportunity. And if it drops lower, well, you've got the range low there as well at 58, 6.1. So for me, from a spot perspective, it's definitely where I really want to load up big.
Yeah, definitely. Yep. And yeah, this is this chart is a chart I shared last week. Well, the two most important things I wanted to highlight was mainly the 20 MA weekly. That has been a very strong trend indicator in the past, and that has been retested. It's got retested for the last 2 weeks. Yeah. But yeah, the most impressive thing, in my opinion, is the 200 weekly. And if we project it and we end up losing 20 MA, in my opinion, we could definitely see, which is not that far away. In 1 or 2 months, it could be at 8K.
I think it's a healthy retracement if it comes that deep because it's just a 0.618 fib level retracement.
Yeah,
so there's nothing wrong with that.
Yeah, but in terms of structure in weekly, that I wouldn't like it will still be a higher low, higher low, but
it's a bullish macro. It's a bullish macro market structure though because you've just had a higher high.
Something like this.
Yes, because you just had a higher high followed by the first high low since 2019. So that's quite significant.
Yeah, well, this is exactly what I shared in the Haven last week.
Yeah.
Like we had the argument like, is it truly a higher high? Well, yes, in terms of weekly closes.
It is, yeah. From a weekly perspective, it is a higher high.
Yeah, definitely.
So hence why I'm no longer bearish. For me now, anything deep is a brilliant buying opportunity.
Yeah, me too.
Just one last point. People make a mistake on the 21 weekly moving average. So what you want to see is, if you look at 2017, every time price retests the 21 weekly moving average, it's short-lived. It's a spike and a hard reject. It rejects off it nicely. Yeah.
It never stayed there for a while. It was very often led by strong rejection.
Yeah. You also have to look at the trajectory. Now compare that to 2019. Now I was one of the few people back in 2019 at 10K. I was being bearish. Why? Because if you look how price is resting on the 21 moving average in September, can you see that, Pierre? In September, August, September, there. So look how price is sat on the moving average. That's not what you want to see in a trend. A trend is quite often where price retests the 21 weekly moving average, it moves away very quickly. It doesn't hang around. It didn't do that in 2019. It stayed there for several weeks, retesting the 21 weekly moving average time after time after time, which gave me conviction that it's not going to hold, and we broke down. Now in this instance, you can see there's been some decent wicks, but I think if it does test it again for a third time on a weekly premise, then I think we will break down from it.
Yeah, me too. Like, one of the reasons I wanted, as said earlier in the stream, like I wasn't like in a eager to buy the fucking dip, was because I wanted to see a rejection first. Like it was in the updates. Like I wanted to see first if I wanted to see what we saw on the daily, all the weeks you talked about. Like this, like the first 3 weeks, this was very encouraging for some sort of reaction. But it, in my opinion, it has so much more to do to be back to bullish to me.
Yeah.
Like it's good. It's been moving nicely, and the most interesting thing is that it's been ranging, and we had some many good moves on altcoins.
Yeah.
So that was nice. But it's looking at this, I am neither bearish nor bullish on Bitcoin. I'm like,
I think a lot of it depends on the dollar for me. So I think if dollar bounces in September, October,
exactly.
What you want to be looking for is when dollar rejects. I think dollar will give a bearish retest to 95 or 96. And it lines up quite nicely with the moving averages there, the green one. If we get that retest and dollar starts rolling over, I would heavily bet that Bitcoin will do the inverse and start pushing back up again. So if dollar goes up, I'm expecting Bitcoin to pull back. I'm looking for dollar to start topping out and rejecting, and Bitcoins to start reversing and trending back higher again. So that's one thing I'm trying to time and look for. If the correlation is there, then I'll apply it. If the correlation is no longer there, then it's irrelevant. It doesn't mean anything.
I wanted to ask you that, like, I know it's been a subject like for the last couple of weeks, especially because considering all the craziness around the legacy markets and Forex, well, everybody has been watching them more than they used to, and that's maybe why people tend to realize now how correlated it is.
Yeah.
What is your point on that subject? Do you believe that Bitcoin is tied up to stock market and Forex?
In some parts, yes. In some parts, no. I think it depends. Correlations are always there, but they don't always last. They don't always hold true. Okay.
Yeah.
You have to appreciate the fact that I think Bitcoin now more than ever is heavily algorithmically traded now. And
definitely.
The footprints are there, the signs are there, the fingerprints are there that this is algorithmic. Because why is it so sensitive?
And that's
to
why
the dollar.
That's why moving averages have been so nice to trade on Bitcoin, because it's one of the easiest thing to implement when you're coding an algorithm. Like I said earlier, it's basically
I think moving averages are used in global markets much more than crypto, and that's a fact. They really are. I think so one thing to look out for is dollar testing the 95, 96 level. and rolling over, because that's what I'm looking for personally.
Exactly the same, especially if it comes down in confluence with important moving averages, because even if something that you shouldn't forget is that on dollar, I'm not looking for anything more than a dead cat, like
absolutely,
in terms of structure, like, and that's why that's all moving averages are very nice. It looks like shit, like it's, look at this, if I remove the candles and we only watch the moving averages, look at this, like.
So you also have to understand the fundamentals of this as well. So you have to understand that the Fed are wanting to, they're happy to go with quantitative easing, and they're happy to keep the markets aloft. So again, that's another reason why you may see the dollar push down to the 80 level. But you have to also understand that the ECB have raised concerns about the Euro USD. They do not want to see the Euro above 125. Now that's why I think
they don't want that.
Yeah, they don't want that. They're not happy with that, and there will be action if that does happen. They will do what they need to do necessary to keep the euro below 125. So I think if the euro does bounce, it's going to be to 125, and the dollar probably eventually rolls over to 88 in the coming years. So these are just my macro views. That could change, but I'm just going off what the ECB have stated and what the Fed are doing in terms of quantitative easing. So you also have to understand the fundamentals as to because they do play a part on the price as well.
Yeah, definitely. And this is, for so many years, especially in 2018, everybody wanted to see institutional coming to Bitcoin. Well, you got them. Like they are 100% here based on the recent like correlation. I mean, it's been obvious, like it's insane. Like we've seen so many people, like one shot that was really nice. It was, I think it was Krillin in April or maybe June or maybe May, I don't remember. He was tracking the 1 minute Bitcoin compared to stock market charts.
Yeah.
And he was able to take scalps between like he was able to take scalps in to the minutes, like, which was insane.
Yeah.
Because he was watching the stock markets a little bit more in advance, like.
Right. Yeah.
Anyway, that's
cool.
insane. That's
so
insane. Thanks for the insight, mate. That's very interesting.
Yeah, I'll give you another insight which I look into, which I don't think many people pay attention to. So if you go to the altcoin, Bitcoin dominance chart. So one thing I look for is if you go to the weekly or the 3-day, if you have the 3-day up. And this is where it's helped me quite often, it really has, is that I look for RSI divergences on the Bitcoin dominance chart.
My man.
So it really does.
Now you're talking my language.
It really does help. And I also, again, I'm looking at the RSI. Every time the RSI peaks at the top and price has really tagged a level, then I like to have more risk on in terms of alts. But again, it depends on the overall market aspects as well. But
yeah, it was actually.
So that's the stock RSI. But if you put the RSI on as well, you'll see some divergences at key levels.
I have never ever in my life.
So go back to 2018.
Oh shit.
Yeah, if you look at the 2018, if you look at the 2018 lows, with the RSI, you can delete the stock RSI.
I feel like I'm in uni back again.
Yeah.
Yeah, please teach me, senpai.
You'll almost see kind of like a divergence playing out quite often. I think it might be in the daily or the weekly chart. I can't remember which one it was, but you'll always see these high time frame divergences play out on the Bitcoin dominance, which do lead to significant moves.
What the fuck was that? Oh yeah, it was 2017. My bad. I think it was on 3D.
Oh, I've got a chart on this. I'll drop it into the Haven of some examples of where I look at, because it really does help.
Send it. Meanwhile, I'm checking my bags.
No problem.
I really Yeah, like just looking at the dominance, I think it's probably going to make a move soon. And it's probably not going to be good for altcoins. They could both go up together, but at the same time,
I agree, Bagsy.
I
This
don't
is
think
why
it will.
earlier I was saying that it's been a while we haven't seen Bitcoin destroying shitcoins.
Yeah. So Bagsy, are you seeing the bullish divergences on the altcoin, on the Bitcoin dominance chart as well?
Yeah,
At the lows?
absolutely. Yeah.
So this is why I'm hardly in any alts now. I'm literally in probably like 3 alts, if that.
Oh yeah, same. I have 2 of the Y shitcoin. Like, and even that, this week I was working so much, and yet I managed to make some money that I was like, it's too good to be true. I don't want to give it back, and I'm comfortably just waiting for something like.
Yeah. So I think one thing I also used a couple of weeks ago was total value locked. When I saw TVL coming to almost $10 billion, I had a feeling that psychologically, generally, 10
is there a chart of this on
no,
I don't believe to.
If you go to the DeFi project, I've forgotten what the website is called. It shows you the total value locked, and so 10 is always going to be a psychological level in trading, and the DeFi pulse, there you go, the first one that you had on the Google search. So for me, the key turning point was that close to that 10 billion, and that's where I reduced my risk significantly across the market.
Oh yeah.
Really? Have you ever used that successfully before?
No, because it was the first time, but I was just going off intuition. The fact that 10 billion, 10 is such a huge psychological level.
Oh, it's like we used to exit our position when BitMEX open interest was reaching 1 billion.
Potentially, yeah.
I remember that.
In early 2020, late 2019, it was very helpful.
So I think paying attention to this may help when you see TVL start rolling off, because if this makes a lower high here, and TVL starts rolling off, then what does that tell you about the total value locked in DeFi, that people are pulling out liquidity, right?
People are exiting their value locked. Like,
so then the question is, where is that money going? If it's not in liquidity and they're not buying Ethereum, then
they're going back.
Surely that's a cause for concern that the alt market could be pulling back. So I think that also helps.
But that's insane. Like, look at this yearly chart. That's insane. Wow.
Now, what you do want to see, if this does make a higher high and breaks through the 10 billion mark, then I think DeFi can really.
This would be the push that Wi-Fi. How do you say that in English? YFI. IFI?
No,
I have no idea actually.
How do you say that?
Wi-Fi.
Wi-Fi. Okay, Wi-Fi. Well, I would say if that happens, Wi-Fi is going to 6 digits.
Iffy.
If he's going to 6 digits for sure.
So let me ask you a question, guys. DeFi has been such a big thing. What's your thought on NFTs? Do you know anything about NFTs? Have you looked into them?
I think Bagsy have been a little bit, no?
Yeah.
Thoughts, Bagsy? Do you think there could be the next big thing in this space? I think there will be.
I believe that a lot of people did really well recently, and they're looking to diversify in different things. Now, I think that there's a good chance that the different NFT markets see a lot of investing and just interest overall, because it allows you to own certain unique pieces of data, I guess. So it's it's no different than owning a painting, a physical version. You own.
Absolutely.
So yeah, definitely.
So personally with me, I think DeFi space is great, but I think if NFTs catch on, I think there could be huge potential, and I think it's something that people should pay attention to or start researching, because I'm just going to give you a quick few facts now. To maximize gains in crypto, you really have to be early. I wasn't early on DeFi. I was quite late. I'm gonna admit that openly, because I was overly focused on trading. It's only then when I came to alts and recognized that, okay, the DeFi space is growing, is when I just completely ditched margin trading. Now, I don't want to make the same mistake again, so I'm heavily focused towards fundamentals. Now, I trade less, and I'm looking for the bigger trades where I can hold positions and make 3-4x. Even if I have to wait 6 months, I'm happy to do that. I'm happy to take less trades and research more. I enjoy it. But one thing I do have to say is that definitely do not sleep on NFTs, because it is a growing space. It's a space that can potentially bring 10,000 or 100,000 users into this space because of what it offers. Now, you have to understand that NFT this year is expected to grow significantly in 2020. And we're looking to hit around $300 million in value. That's the forecast. That's the biggest and largest forecast that has ever been predicted for NFTs. And it's still, if you think about it, is relatively small in comparison to the total value locked, which is 8 billion. So it's a fraction of the market share. But if it takes off, then it could be big. And you also have to understand that NFTs are what Bagsy said. They are digital collectibles in the sense they cannot be replicated, can't be printed, you can't counterfeit them.
They're crypto kitties.
It is, yeah. Kitty is an example.
Yes.
But there's a difference though, because Ethereum, the majority of NFTs have been created or will be created on Ethereum. Now, what you have to understand with Ethereum is that you have two types of Ethereums. There's an ERC-721, which is a type of NFT, which is a type what CryptoKitty was created on, okay? And then you've got an ERC-115. It's an improved version of ERC-721. So ERC-721, like I said, is what CryptoKitties was created on. Everybody knows what an ERC-20 is, but an ERC-1155 will allow for both smart contracts and NFTs as well. So that's why I think ERC-1155 is something to look for and understand what it is, because I think it will have a huge role to play if NFTs take off, especially in the gaming arena, combined with crypto and DeFi. For example, you might have, I don't know, Fortnite, where you can obtain unique weapons.
You can have skins. Yeah, I was thinking more about Counter-Strike because I think it was 8 years ago at the beginning of Counter-Strike Global Offensive. There were so many websites where you could gamble your skins before Steam making it forbidden. And so many people were like spending a knife karambite on CS:GO at peak was worth something like 3K, something like this.
Yeah, absolutely.
It's like, as long as someone is willing to give value to something, it will eventually have value. Like, I mean,
you
just have to look at the top 10 market cap of crypto.
Yeah, absolutely. So, but like I said, I think NFTs, don't sleep on them because you want to be ahead of the game.
So, do you have things that we could look up to, like, or read if you want to get to know a bit more?
So I will be making a YouTube video on NFTs in the coming week or so. So when I launch,
that's show me, bro.
when I launch it, hopefully I'll cover the basics of NFTs and why I think it could be potentially one to watch in this space. Because I think combined with DeFi and the whole yielding and owning liquidity and the staking and having governance over something, it's just, I think there's huge scope. It could really work well.
And the really valuable thing here is, it might sound a bit strange that people put value into something that you can't hold, but truthfully, it's just about who created the art and how exclusive it feels to people. And so I believe XO's right. And I don't mean throw money at art pieces, but even just trying to get a job at a company that's offering these, or especially if you have some sort of penchant for art.
I'll tell you why else it's important, because if you think about it, if you look at the current economy, do we really have faith in the monetary system? Yes, we do, for as long as it exists. But again, if the dollar is in deflation mode and there's inflation and quantitative easing, then it all depends on what your view of the dollar is. I'm not saying Bitcoin is going to replace the dollar, but I think people from an investment perspective are looking to invest their money in tangible assets that they know could potentially be a good investment or a safe hold for where the capital can be. At the end of the day, you don't want to have millions of dollars locked up in your bank account, because if banks go bankrupt, what are you going to do?
Yeah, definitely.
You're only insured up to a certain amount on your account. So I'm not saying obviously go and buy NFTs or start investing in them. It's just an option to
Go buy some crypto key.
I own a few NFT pieces already.
Yeah.
Like, is this place so young that you can basically not buy NFT without OTC or something like this? Like,
Bagsy?
do you have places where you can find, and how do you define one that has value? Like, is it because it looks beautiful? Is it because, like, I mean, it's art, so
it's a mixture of all that and who created the piece, you know.
Okay, so there are already some people famous in the NFT place.
I don't think they're famous from NFTs, but they're just artists who are known that are now turning it into digital art pieces like that. So companies are just, headhunting people.
Well, that's interesting, because this could basically be one of the first and true blockchain use case. Like, so many people have always been saying that
first use case is the dark web, my friend. How
dare
dare you?
Okay, Bagsy, you know that we're gonna talk about this in approximately 20 minutes, but I agree.
I like what Rabbit's put in the comments on NFTs and an individual token representing the entire ownership of a particular real world asset, and an STO would be the wider tokenization. So yeah, that's potentially one very good way of looking at it potentially. Again, I just think it's something to watch out for. If it takes off, it's going to be interesting.
You know what? This is something I know I need to work on, because, like, I don't know if I've been lucky or not, but I've been riding altcoin trends quite well.
Of course, yeah.
But I feel like if we truly enter some sort of a golden fundamental area, you definitely want to be ahead of the trend, end of the curve, like you just said before, and someone able to mix fundamental analysis without being especially an expert. You don't have to be an expert, but
no, you don't.
If you know the basics and you basically know what to look for, tokenomics, what the trend, who are and what are they looking for, you want to follow smart money, and most of the smart money isn't trading based on charts only.
They all have, the top funds, firms, investment firms all have a specialist research team, and they're always researching the market. We obviously don't have that privilege, but that's where
I have TraderXO charts.
Oh, fucking hell, man. Good luck. So yeah, I think it helps now to just spend half an hour instead of staring at the chart for half an hour. Maybe just check out a few crypto websites to see what the latest news is. That's always a great source of info. And I'll be honest with you, I can't keep up to pace with everything that's happening in this space. If you asked me what sushi swap was, I couldn't fucking tell you, because I'm not interested. I'm looking at more real world case uses or projects that are going to help crypto be adopted, and I think NFTs could potentially be one of those things that helps kickstart the bigger adoption that is probably required. Because at the moment, the market really, I don't know. Is there a large influx of retail money coming in? I'm not convinced there is. I think it's just possibly more bigger players entering the market, but we'll soon find out.
Yeah, that's interesting. I wasn't expecting to talk about that. Like, I don't know shit about that, sincerely. Like, I really need to catch up on that. And this is why you should follow XO on YouTube.
Well, I think the YouTube channel came out of my passion, because I'll just be honest. I think I spent too much time now just margin trading Bitcoin because altcoins were dead, and Pierre, you did very well, and you guys in the Haven did extremely well. You caught the alt trend at the start. You've been riding them since 2019, 2020. So, props to you guys on that one. I think it's more that I really enjoy, because I come from a development background of 12 years. I really enjoy software development. I understand blockchain. I used to program in Solidity, creating contracts just to play around with. So it's something that I want to go back into. But I was telling Bagsy next year that I want to get out there more and meet teams, network more, meet people, because that's where you really understand what's actually happening behind the scenes, not what's happening on CT or YouTube. It's really getting out there, meeting people, meeting teams, meeting projects, going to blockchain events. And that's what I'm really looking forward to more than anything. And that's why the YouTube channel has come about, because it kind of encourages me to produce content, and it also encourages me to actively research that I have to keep producing content, and I want to share whatever I learn or come across, because I think it just consolidates what you've learned or what you know. So I think it's good to be active.
Yeah, there's that. And as you said, you have a IT background and developing background. It would be a shame not to use it to your advantage, especially since you went full time on crypto recently, if I'm correct.
Yeah, absolutely. Yeah.
Yeah, that would be a shame not to use it. Like, make it can be one edge against.
Dude, I'm not kidding you. Bloody Solidity or smart contract developers get paid a good amount of money, man. It's probably $150,000 to $200,000 a year for a smart contract.
Everybody's learning Solidity recently.
Fucking hell, man! It just really has blown up, and there's a huge demand. So if any of you guys are like potentially wanting to learn Python because you want to go into algorithmic trading, I'd probably say try learning Solidity, because if you know JavaScript and if you know the basics of it, you'll pick up Solidity very quickly, and before you know it, you'll be creating your own test smart contracts and ERC20 tokens, and before you know it, you might be cloning, I don't know, some shitty .finance project and just dumping it on Uniswap. So there you go.
You could create the Avon.finance.
Absolutely. Could happen.
Could happen. Like, I mean,
could happen.
Make me your advisor. I'll help you.
Yeah. I know that you will be my first PR, obviously. Definitely.
Oh, good, man.
Yeah, that's interesting. And what like, I can't help myself but to think that I think it's a bear market PTSD, but this entire decentralized finance trend seems so brutal, so quick, so it's the Ponziest thing I've seen in a while. Like, where is this money coming from? Like, I've seen some people farming for 500 API and things like this. Where the fuck is this money coming from? And what true value does it bring? Like, I've been riding the DeFi trend since June, I think June, early July. So I wasn't early, but I was okay. But I mean, I'm very happy I'm a shitcoin trader, because if I was a fundamental only trader, I would have most likely been like, I would have been a bit cautious and most likely missed it. But because I'm a shitcoin trader, I was only trading the charts. And I don't know how do you guys feel about it? Like, and I feel like it's so much money stuck in farming fields and things like this that the day this shit pops, it could get really ugly with many money stuck in those pools, no?
Personally, where do I think the money's come from? My opinion is it's come from large and mid caps of 2017, 2018 projects that have leaked lower, they've bet lower, and they've come into DeFi space.
Yeah.
You have to understand, right, is that on these DeFi projects, there is no backholders. The supply is thin. It's pure price discovery. And equally, what you have to appreciate is, why do you think the likes of Dia or Red, why do you think they pump really easy and they dump just as hard? Because the books are illiquid, in my opinion. They're not liquid enough, and there's no levels of support being built. It's just a straight right up and a straight right back down again. And I think a lot of that money has come from the 2017, 18, 19. People are just dumping the bags and just jumping onto the new hype. I would do the same as well. If I was holding ICX or Neo for like 2 years and I see some DeFi coins pumping, I would probably dump them and just jump into the DeFi coins as well.
Last few months have been the hardest, in my opinion, for someone holding like Ripple or something like this.
Yeah.
Because you basically think that you are investing in the correct coin because you believe in the tech, and you come around and you see shit like sushi pumping left and right, burger being chilled by CZ and things like that. You must be so frustrated. Like, this must be the hardest part for them.
Yeah, go on, Bagsy.
So there's one thing no one mentioned, and I'm kind of disappointed. 2 words: Alameda Research.
Yeah,
That's where the
exactly.
money's coming from.
Exactly. This
That is where the
exactly.
fucking money's coming from.
Exactly.
Whether the day they opened Sushi Swap, 86%, I think, something insane
Yeah.
of
Yeah.
liquidity just vanished. And now I don't think that's all them, but it was powerful.
So I think you're right, Bagsy. I think if you can track the projects Alameda and Binance Labs are backing, they're the ones that you want to get in on, in my opinion.
Absolutely.
Yeah, go where the money's going, and
Yeah.
the biggest money in the space are the exchanges.
Yeah.
Oh yeah, definitely, because they have been the one milking the beer market the hardest.
Yeah, absolutely.
Yep. And now they have money, and now it's time to make
Exactly.
even more with it.
Exactly. Well, some people might be mad about that, but
That's capitalism, baby. Use it.
there's that, and most importantly, they've just been the smartest in the room. Like, if you're not the smartest in the
Finance
room,
PR hasn't been too good lately, but
I hate
FTX is
Binance,
on
but
point.
I
So
am one of the guy that hates Binance the
Mm.
most and sees it the most. I think he's a crook. I think he's a cunt, but is still around. He's making money. He's actually leading this market with Sam, in my opinion. Um, he managed to turn big actors of the markets like Bitcoiners and BitMEX, Bytestamp, all of them, they are pretty much not irrelevant. Like BitMEX is still one of the biggest actor in the space,
yeah, of
but
course.
but in we are slowly seeing volumes even on futures now catching up with BitMEX on FTX and Binance.
Yeah, they are. They are because I think I just think they offer a better trading environment and platform than what BitMEX offer
Yeah,
currently.
definitely.
I will say one thing though, you have to appreciate that as more coins come into the market, people complain that, oh well, with so many coins, the market's saturated, there won't be enough money to pump them. That's actually incorrect.
Yeah,
If you think about
I agree.
it,
I agree.
if you think about it, it's going to be easier to move because the books are thinner.
Yeah,
I'm talking about new coins being listed. There's going to be not much supply. The books are going to move just as easily. So I disagree with the whole argument that
well,
there's too many coins in saturation.
exactly. And one of the best example of that is Huobi in 2019. The reason Huobi
Yeah,
was one of the best exchange to trade shitcoin in 2019 was because the books were so thin on UOB shitcoins.
Was because of Seal.
Yeah, Seal obviously, but there were so many others.
Yeah.
But yeah, obviously
yeah,
Seal, that's my baby. But like, they were like, it was 100% sure that it was UOB driving these pumps, and they could basically do whatever they wanted with their shitcoins because they had most of the supply, books were thin, and they did it really well. And if you put that in context with how crazy 2020 has been, 2019 was basically the best time to make the money, like for them. They were
yeah,
preparing themselves for 2019, 2020, in my opinion.
absolutely. I will I will say one thing though. Um, I will never ever short Bitcoin above 12K
Oh yeah, me
because
neither.
you have to understand one thing. When Bitcoin breaks above 12K and closes above it, you will probably see on a daily basis 500, 700, $800 daily dollar candles. When price moves up into that higher range, the relative move has to be larger for the percentage gain. So bear that in mind.
Yeah. And most importantly, you won't have time to short Bitcoin because above 12K, it's
It's
the
gone.
everybody
It's
gets a
going, yeah.
girlfriend area.
Yeah, it's going to go in my opinion. Once it gets above 14, 15, potentially. I think next year. I'm not convinced it's going to be this year. But
I think this entire price action is completely irrelevant in my
so
opinion.
do you want to show your users the macro range on Bitcoin that I use? Do you know what I mean? So if you
Yeah.
if you
Please
delete
do.
everything and if you use
I think I know your chart
yeah
enough.
yeah. So this for me is 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 a mother of all ranges from a high time
I think
perspective.
it's this one here,
Yeah, yeah, it's the one there. Yeah,
and the other one you took
one of
was
the
this
range
one.
high. No, lower down. So
Oh
come
yeah.
to September 2017, the swing low.
yeah.
Lower, lower, no, previous swing point, lower.
Yeah.
There, that one.
Lower than that. Oh yeah, here.
Yeah. Now if you just delete the removing averages and if you just hide them, you get a very clean. And then if you just put the swing high at 20k, you've almost got the perfect mid range on the chart. And for me, when you look at it in this context and it closes above 12k, it's going to take off.
Yeah, I agree.
Just treat it as a range on a lower time frame,
Mhm.
and you can see that. And then what you can do is what SC taught me. You can use your range quarters. So you got the 25 and 75. I think UB uses range quarters quite well.
Yeah.
Hello.
Yeah.
Hey, bro.
Oh, Ubi, you
Hey,
here?
UB. Yeah. So I've seen UB
Maybe-
uses range quarters really well. So
Yeah.
that's what I
That's
would
clean.
look at. Yeah.
The confluence is just so big in the 12k area. Like,
Yeah.
we have so much there.
So
Definitely, yeah, you're right. I don't want to be fading a clean 12k
no
break.
chance. You gotta be crazy to fade anything above 12k.
Yeah. But do you think that anything like this could happen if, let's say we see some crazy shit by the end of the year? Let's say we see a second big wave of Corona. We see Trump losing the elections despite being the favorite.
I think all these are narratives to what the market was going to do anyway. Because look, I mean, okay, yeah, the stock market tanked, but look, we knew about COVID since January, February, and March. It tanked. Why did it take 3 months for the market to tank? Even though COVID started circulating in America in February, and globally, everybody knew about COVID occurring in China in January. So, was it a knee-jerk reaction for the market? Possibly, and the fact that then what happens is that when you have algorithms that kick in into sell mode, it's just going to cascade even harder.
Mhm.
And I think that's what really happens.
Well, we know what happened in March
Yeah.
for Bitcoin. Like,
Yeah. Well, they follow the markets, the algorithms. People say it was BitMEX or whatever. I'm not convinced. I mean, yeah, BitMEX did have a part to play in it, but I can't really comment. But I think the key for me, like I said to you, comes down to two things: the dollar. The dollar is the king of all markets, and what the dollar does next in terms of its bigger move, is gonna determine what Bitcoin does.
I think Rabbit said something interesting. He's right though. It was late February that we saw Euro travel bans.
Yeah.
And the first companies that started to really die were travel companies, like plane companies.
Yeah, it was,
that? I don't know the name in English, but because basically they are the market that is absorbing one of the most important amount of oil, and maybe I don't know. Yeah, maybe I don't have the knowledge enough to comment that.
There's
Hey,
one
guys.
thing. There's
I've
one
been-
thing. Sorry.
go
There's
ahead.
one thing I think people do not pay any attention to. When I say people in crypto, I think the large majority of people do not pay any attention to the bond market or the yield market. What happens in the bond market sets the tone in the bonds market,
Oh
the
yeah.
US. What happens in the bonds market and the yields sets the tone for what the stock market will do and what the other markets will do. Right now, the bond market isn't doing anything. It's just in a very compressed range. Maybe in another session, I'll go over that with you and what to look for. But it's something that I don't see people talking about very often. It's more, it's something that institutions and bond traders and the big players really look at, because the bond market is what this is the market that knows what's going to happen next, or it's going to tell you what's going to happen next. So that's something worth looking into if anybody's still listening. Try to maybe watch some YouTube videos on why bonds are the market that can tell you what could potentially happen in the very near future.
Definitely. Like, and this is something I've been trying to work on recently. Like, some people told I saw some people on Twitter say, like, if you're not trading SPX or dollar, you shouldn't be charting it, no discussing it. I tend to disagree, and I think it's very interesting for people in crypto markets to finally, or to at least try to be more aware of the macro contexts they are in, because we are not in 2013, 2014 anymore. Bitcoin is not, it's much, how can I say that? Bitcoin is much more mainstream than it used to be. You cannot. It's not just a place where um, people buying drugs on the internet are trading it. You know, like
I don't think it matters what people say. People can say what they want. It's a lot of bollocks. If the chart shows you if the chart shows you correlation, you use what you need to use
yeah, exactly.
to do what you need to do. Forget what people say,
Yeah,
in my opinion.
yeah, definitely. This is basically what I answered. I was like, well, first, I'm pretty certain it was a subtweet to me.
Another thing, it's interesting that you look at the SPX, but another thing that people don't really talk about is the NQ, the Nasdaq, because that really will set the tone for the SPX. Because you have to understand what the Nasdaq is and how much of an influence it has on the SPX. Everybody knows that the SPX has rallied because of tech stocks. Now, if you look at every other sector in the SPX, in the US stock market, they're not really doing much. It's the tech stocks that are carrying the SPX, and that's illustrated on the Nasdaq. So if the Nasdaq starts rolling over, there's a high probability that the SPX will start rolling over, because it's not going to be the other stocks which are going to carry the SPX. It's all to do with the tech stocks.
That's insane. That's what a clean parabola. Like, look at this. That's insane. And it's from 2008, basically.
Yeah.
One of the greatest.
I wanted to jump in and mention something about the dollar. Also, hi everyone, it's UB. I joined a little late. But I just wanted to mention that there's going to be a second stimulus check. So I'm personally interested in what the reaction will be from the dollar after that.
That's confirmed already?
What'd you say?
Is it confirmed already?
No, it didn't pass the vote the other day. But
oh yeah, because I would expect it to. Yeah, you're right. I agree with you. It will be very interesting to check what happens.
Yeah, but there's definitely going to be one. So that's why I've kind of haven't really done too much in-depth analysis for the dollar, just because I'm waiting for that second check to see what's going to happen.
So you're telling me that I'm going to have to spend my evening listening to Trump again?
Yeah, it's quality content.
Kill me already.
So, Yubi, quick question for you. I know you dabble in the tech stock, in the SPX and the Nasdaq. Is that right?
Yeah. Yep.
Do you look at the yields and the bonds? Is that something you pay attention to as well?
Unfortunately, I have like a very, very simple approach to my stock trading nowadays. I literally just chart it as I normally would a crypto trade. I do zero research and kind of go towards that. But if I was more interested in like long-term investing, that's something I would definitely look out for.
Yeah, sure. Yeah.
That's very interesting. I think just Bagsy, do you confirm that you are recording it, the call?
Yeah.
Yeah, thanks, mate. I don't know how to do that. That's nice. It's very interesting. That's very interesting.
I'll tell you what we'll do then. If you guys want, we'll do a session next week, and I'll go over the bonds, the yields, and how they're related to the stock market, the Nasdaq, the dollar. How it all. What you want to look at is it is a bigger macro picture, but it's a very important macro picture because it could tell you the direction of the market for the next 2-3 months. And like I said to you, the bond market is doing nothing but consolidating in a very, very tight range. When that breaks out, we'll get the bigger move in all markets. And I think that's going to hold true. So that's something that if you want, I'll cover next week at some point.
Yeah, with pleasure. With pleasure. At least this is something I could learn from, so I'm very interested in it. And I believe that if I have some things to learn from, we have some things to learn from. That's very interesting. I never look at those. Like I do look at Bitcoin, at dollar and stock market, but never the rest.
Yeah, I'll go over some key fundamental charts that people perhaps, if they really want to, like I said, understand the global macro picture, which charts you should be looking at and why and what they mean and what they reflect and what they tell you. Not about the economy, but perhaps give you some glimpses into the economy. Like there's a section called transportation. That's a very key chart that people look at in funds, in investment firms, in institutions. So we'll cover that next time. It's probably out of context of this.
Do you know the ticker of this thing?
Oh shit, I've got it saved. I can't remember the exact ticker by typing it in.
I don't know.
Let me see if I can bring it in.
It's been a while. I haven't looked at. What do you think the European stock market, the CAC 40, or the French, for example, stock market? Do you think they are only proxies of the American stock market, or they do have some impacts?
I disagree. I don't think they're proxies, because if you look at the FTSE is absolutely shit compared to the US stock market and the US Nasdaq. The FTSE is screwed. But what is doing well is the fact that Euro has managed COVID cases better than the Americans, and that's why I think also has led to a strength in the Euro USD against the dollar. So, and the fact that the American Fed is also, like I said, is really heavily going into quantitative easing. So I think Europe is definitely in a stronger position, both economically and from the chart perspective.
It's interesting because this, at least in France, when listening to politics, you could think the exact opposite. Everybody's saying that Europe is screwed.
Okay, so one thing you have to understand is that the economy doesn't necessarily represent the stock market.
Definitely. And we saw that.
Yeah,
I mean,
they're very disconnected.
We saw that during Corona. Like there were 30 million US people were unemployed, and stock market was just pumping and pumping. Like this was the best example that finance is not economy.
So one thing the Fed can't do, you can't print an economy. You can print the price of an asset, but you can't print the economy. And this is what the Fed are effectively doing. They're trying to keep the stock market afloat to give the positivity that everything's fine. But really, in the hood, is it? I don't think it is. So
me neither.
Like I said, you can't print the economy. There's only so much you can print, but it's not going to fix the economy anytime soon.
Yeah.
We're going to turn into Venezuela.
Well,
yeah, possibly.
Last week I was doing a podcast with Panama Crypto, and we were talking very briefly about how France and how Panama has dealt with COVID. And I was telling him that here in France, many people are calling Macron a dictator. They are saying he's a liberal dictator and things like this. And they were all saying that France and Europe as a whole has been dealing with COVID pretty poorly. And it was, as someone who was living in Panama, he was telling me that it was pure nonsense, like full bollocks. It was like, oh, people can say that they should come to Cuba or Panama for 2 weeks and they will know how shitty the situation here is. And pretty much, and every country that has been fading COVID, you can say whatever you want about the disease and is it really dangerous or thing like this, but the truth is that it's, even if it's not, it's still slowing down the economy. It's still affecting jobs.
Yeah,
it's still affecting industries.
Absolutely.
I have a big client here in France. It's called GL Event. It's one of the biggest entertainment French company, and their market is split between Europe and China, and they're basically haven't done a single shit. Everybody's at home since last January. It's insane. And if it was not for France, most of the workers would have been laid off, but they are not because the government is paying for their wages.
No, absolutely. Makes sense. But I think everything that I've mentioned today, I don't want people to take it out of context. It's not something I look at and then trade Bitcoin on a daily basis. I'm talking about the macro picture.
Yeah, it's the bigger
because at the end of the day, I am more of an investor than I am a trader in Bitcoin. That's a fact.
Yeah.
I only trade with 10% of 15-20% of my capital. 80% is purely for investment purposes. That's why I look at the bigger picture, because I don't want to be holding Bitcoin at 11K, 12K, and then it drops to 7K and I've taken a huge drawdown when I could have sold my Bitcoin or shorted Bitcoin on a 1x leverage or 2x leverage and get more and buy it back lower.
We are all doing that to have more Bitcoin at the end of the day.
Of course, yeah. So this is why for me, trading is great, but I think the bigger money is made for me personally from an investment perspective, like buying
Yeah, I agree.
Bitcoin at the low, selling at 10, 11K, buying back at 6.
Yeah, I agree.
So
Well, you're calling that investing because you have been used during the last couple of years to trade on lower time frames, but for some people, holding a position for a couple of weeks isn't necessarily an investment. It's more of a
no,
trade.
it's just a swing trade, in my opinion.
Yeah.
Whereas Bitcoin spot, that is a positional trade you're looking to obtain.
Someone asked an interesting question about what you just said. Do you think that this strategy is only viable when you have a large capital?
It, I think
That's a
large.
very good question.
I think large depends. What is large to you? What is small to you? Everybody's got different goals and agendas, and
Yeah.
some people invest more in Bitcoin. Some people have 7 figures in Bitcoin. Some people have 5. It depends what your goals are. What else are you invested in? Do you have properties? Do you have land? Do you have
Yeah.
other investments? So it's relative to you. What you think is. All I will say is that from experience, I've probably lost more money trading by bad trade management, not using stops, getting liquidated back in 2018, knife catching.
Definitely.
What I will say has made the most money is that just be patient. If price is ranging, don't go in 30, 40, 50%. If it's in a range, just go nice and light on the range, trade it level to highs to lows, lows to highs. The trend is where you want to floor it, because the trend is where you're going to make 2, 3, 4x, and you will always get that trend or that cycle once, possibly twice in a year, and that's where you want to step in and make the most money. The minute you see a distribution pattern play out, get out of the market, sit on your hands, maybe short it, and then just let price come back into a range lower down. And when it starts ranging again, because if you're on the wrong side of a downtrend, that's where you're going to get your biggest drawdown. So you really get your money, take it out, short it, reduce your exposure, let the moving averages bottom out, and then wait for the market structure to confirm into a higher high on a daily time frame or a H4. Then you can start stepping in, slowly start stepping in, and then wait for the next trend.
And and I think I agree with you, and I think it's the same thing for me. The amount of money I lost in 2018 is just beyond ridiculous, and it was mainly because I wasn't able to understand the importance of a trade and how to spot it. And I think that's why I've been focused so much since then to find indicators that I believe and that I use to understand trends. And that's why I'm mainly focused on moving averages, in my opinion.
One thing stands out for me in 2018 was UB and Cash Boy's epic Ethereum shorts.
Yeah.
And they were beautiful trends, and UB absolutely smashed it all the way down.
I remember.
And that's why I say that the trend is where you're going to make. If you get it right and early, or even just at the start, you're really going to cream it.
Yeah.
And you don't want to be on the wrong side of it. And me, due to lack of experience in 2018, I was trying to long on the way down to 3K. I tried long in 4.5K, 4K, 3.5K, and then I just gave up and I just bought Bitcoin at spot.
I think the main issue people have with that is they're too emotionally invested into the market. So like that's just something I just have not been able to really put into words on how. Like the best way I could say it is just don't give a shit, but that's literally not helpful at all to say like don't care about don't care about Bitcoin. Like it's just hard to put into words because that's something I struggle with trying to teach people, but riding trends is fun.
It's hard. I'll be honest with you. October 2018, I was emotionally attached to Bitcoin. I found it hard to sell Bitcoin, even though I wanted to sell at 6K, I couldn't. And I thought, it's just probably going to bounce to 5 and bounce back up to 8. And it didn't. It went completely the way. And that's when I had my wake-up call. But, having said that, I remember back in 2019, in June, July, I sold at 12K. Bitcoin went to 14K. I just couldn't give a shit. I really didn't give a shit.
Exactly. And I think I think it comes with one of the true only alpha everybody can leak for free is screen time and experience.
Yeah.
It's exactly the same thing that happened to me, like, well, just 2 weeks ago, 3 weeks ago, when I went to vacation and I sold most of my stack when Bitcoin started losing 25 EMA on daily and things like this. I was like, back then I would have most likely never exited in my position. I would never have been able to spend good holidays without being invested in Bitcoin. And if with time you just know and understand yourself, learn yourself, know yourself better, and you know that it's okay, like it happened. You zoom out and you realize that you will maybe miss something, but you won't most likely miss the entire trend if you know what you're doing. Like you need, it all comes from time screen and trust yourself and your system, I would say. Do not overtrust it. Don't be cocky, but
And you also have to not trade at certain times. Just straight up, like you can stare at charts and try and find some new alpha without trading. I mean, you could use the replay function on TradingView. That's a great tool just to see, like, hey, what would I have done? Just go to a random time frame. If you're testing out, I don't know, a low time frame strategy, just go to random day, random time, and just hit play and see what you would have done in that scenario. Would I have longed it? What would the setup be? Of course, that's paper trading, and you may not be emotionally invested and you don't care as much, but you really should be disciplined with that, because that's how you learn and you develop your own strategies, or you learn from a mentor or a group or whatever.
Yeah, absolutely. I think people don't realize it's okay to go months without significant exposure to Bitcoin. So from July 2019 to December, I had very little BTC exposure. Even now, I think I have 10% Bitcoin exposure. I'm heavily in cash because I'm happy if Bitcoin goes to 11K. It doesn't really bother me that much because I do think there will be a decent pullback. If I'm wrong, fine, I just get back in at 11.2, knowing that the chances of me suffering a significant drawdown are probably going to be reduced. I have an invalidation level. So
there's that, and most importantly, you will maybe have a smaller stack of Bitcoin that you used to, but I believe that in crypto, riding an uptrend is easier than riding a downtrend. And most importantly, if you know yourself and you know that you're a good shitcoin trader, a good fundamental analyst, the risk of missing the beginning of a trend or bounce is less important than giving away your capital, in my opinion. Like, I sleep better at night if I'm not in a position and I see Bitcoin pumping than if I'm in a position and I see Bitcoin dumping. I don't know if you see what I mean.
I agree. I think margin trading can be exhaustive if you're over trading and you're in positions overnight. Now I just don't give a shit. I don't risk as much. But
me neither.
Yeah, it's an interesting question from Jermaine. He talks about questions about accumulation, distribution patterns. Where can you? So Wyckoff is basically it talks more about the index or patterns that you will see on a Wyckoff accumulation or distribution pattern. In a nutshell, all it really is just a range. In the simplest term, a distribution or accumulation is just purely a range. All you've got is just got more of a markup that annotates what certain parts of the chart is at certain price points or inflection points. Now, one thing you have to be careful is with accumulation or distribution, accumulation can easily break down and drop even lower. And what looks to be like distribution, because I thought Bitcoin was distributing back in June, July, August, is reaccumulation. So you can there's accumulation, there's distribution. That's the high and the low range. In between, you have redistribution and reaccumulation. So you want to just identify, and what you're looking for is volume profiles, price action, and understanding where you're going to be wrong as well in the different phases.
Something I very often say in the group is that, sorry, there's a...
No, it's okay.
Yeah. what I often say in the group is that the reason I would much rather miss a bottom or a top is because it's not a meme when people are saying that money is made in the middle. Obviously, it's always better to be early in the trend, especially on hardcore trending assets like altcoins, because altcoins sometimes when they start moving might not give you an entry. But on slower assets like Bitcoin or Ethereum, even if Ethereum is much more volatile in my opinion.
Yeah.
Well,
yeah, absolutely.
you can really make money in the middle, like much more easily than on altcoins in my opinion. Depends on what time frame you trade, obviously, but
Yeah. There's one thing that I don't think people talk about enough. I think you guys probably do, but publicly people don't, is trade management and entering and exiting trades. And I know for a fact UB does it really well. UB, correct me if I'm wrong, but you scale into your trades quite often. Is that right?
Thanks. Yes, I do.
Yeah. UB does it, SE does it. And one of the mistakes I made in 2018 was that price comes to level, full position size, that's it. And before you know it, I'm puking it back out. So this is before I joined SE. And now look at SE trade. He trades some huge size. And what he does is he'll go in 1/3 at a time. And when price confirms on a lower time frame, when it reclaims key SR levels, he'll then start scaling in more size. So this for me has been a game changer because it helps to remove your emotions.
It's fluid.
It's fluid
and with his positions.
Yeah, and it also prevents you from having too much of a tight stop because what you really want, what I often do is, as well, is like where I would normally set my stop. I know this sounds crazy. Where I would normally set my stop, I actually have other limits in there as well because I'd love to get fill there. And those areas are generally where people get stopped as well. So I'm looking to get fills where a year ago I probably would have got stopped. So one thing that will help you is your MAE and MFE. That's maximum adverse excursion and maximum. I forgot what the F stands for now. Fuck.
Yeah.
But look it up. If you journal, then you should know your MAE and MFE, which will help you position your stops accordingly.
I do something somewhat similar as far as entering into a position. So I'll have a specific entry, let's say, I don't know, 10K for Bitcoin, right? So I'll enter probably 1/3 of my position size. And then, for example, if I'm basing a trade off of the 4-hour, I'll break it down a little bit to the lower time frames and just ladder in a little bit more after more and more, I get more and more confirmation. So that's not to be confused with I'm waiting for confirmation yet already in a position. What I'm actually doing is I'm adding to my position when my argument becomes stronger and stronger.
Yeah.
I agree.
This is something I realized that I do best when I can't trade.
Yeah.
Like, for example, last week, one of the reasons I had a great week was because I wasn't able to trade, and the only thing I was doing was buy YF shitcoin, Wi-Fi. I don't know how to say that, because the longer it lasts, the stronger my argument was. And this is something I would have most likely not done that well if I was spending all my times in front of the chart. And this is something I need to work on because I feel like it's the next level you need to get to if you want to be able to manage daily positions.
If you're trading 1-2 trades a day, there's no reason why you shouldn't be journaling if you really want to grow because like I said, your two key metrics are MAE and MFE because this will really help you ascertain where you can improve your trading and how you can improve it. Because sometimes people complain, oh, I take profit too early. Well, do you have a record that tells you how much profit you gave away? And do you have that over a good sample size of trades? And same with being stopped out. How often do you get stopped out? How often do you puke your position? And by what price average do you normally puke your position?
Yeah.
So it can be a percentage, it can be a number. You just got to figure out, but it will help you with your trading immensely, especially from a profit-taking perspective. Because I think people struggle not knowing when to take profit more. Even I do. I struggle. I'm not going to deny that in the trending market. I struggle because I don't know where to take profit. Do I take a bit off? Do I take it all off? Track was a brilliant example. I sold all my track at 15 cents. It went to 25 cents. Now, is that a case of psychologically because I was afraid of price dumping? Yes, it was. So had I stuck to my rules, my trading rules, then I would have given some level of drawdown where I think, okay, I've had enough drawdown from a position where I'm in profit. So there's a concept called evolving R, which I don't know if you guys have covered it. It's a very good concept to know and learn. If you guys haven't come across that, then I think Dante has some resources on evolving. Basically, all you're doing is normally when you take a trade, you're looking at your risk reward on the setup. But say prices move now 70% towards your target. What is your risk reward to your target from 70%? And what's your FTA? What problems are there along the way? So does it make sense now to start taking some profit, or are you going to just piss your profits all the way back 20, 30, 40% lower? And you've just suffered a 30, 40% drawdown. So what I'm trying to say is, in a nutshell, imagine you take a trade, price goes 70% to your target, recalculate your risk reward. Where's the immediate level of support? Where's the immediate level of resistance? If it breaks that immediate level of support, cut it, get out, because you want to capture as much profit. Why do you want to have such a huge drawdown and give back 30, 40, 50% of your gain?
Because I hate myself.
And
that's a different story.
And I think Bitcoin is showing, for example, a good example. Like you could have entered a trade from lower, and right now you could decide to high your stops below this level that should not be lost. If truly bullish, I think that's the kind of thought process you need to get to eventually.
You see that red level you got here? If I was in long from the lows of 10.25s and price dropped below the red level, I'd cut it. I'd take my profits because you now know that if you want to get bullish or long again, if price reclaims the red level, you can jump back in.
Exactly.
There's no problem.
That's exactly that. That's what I meant. Like, it has no business going back below if bearish. So that would be a logical place to de-risk. But if it was truly bearish, it would have been a fake out, and it would have no business going back above again. And you have a stronger argument to get back above, to get back in.
Yeah. And it has happened to me. For example, if price does dip below the red, I'll quit it because I think fine, I've made profit, and it does often reclaim and put in a fake out to shake me out. But that's fine because I know exactly where I'm going to get back in again. So I don't mind missing
exactly
0.5%, 1% of a move. That's going to be 3-4% on Bitcoin. Again, percent doesn't really matter. It's all about your position size and what you're risking on the trade. So that's all that matters.
Bet more. That meme. Bet more.
It's exactly that. Like that's you said it better, but it's basically what I wanted to say earlier when I said that yes, I do have a plan to enter 9.6 like last week.
Yeah.
But if I miss it and I see Bitcoin going back above 10K, it was maybe an even better argument than actually longing at 9.6. I don't know if I'm saying it clearly.
Yeah, no, I get what you're saying.
My English is even more broken when I sleep less than 10 hours in 7 days. It's very interesting, and I wish I could stay longer, but as I just said, I'm almost dying on my desk right now.
Yeah, let's wrap it up here.
But it's been so interesting. Thank you so much, XO, for coming. It was very nice. Thank you, Bagsy. Also, like always, you're such a good friend.
Love you guys.
And I believe Bagsy recorded the entire chat, or most of it.
Yeah.
And considering how interesting it was, I believe it would be interesting if you can make it private and share it with the guys in the group. But it was very, very interesting, XO. Thank you so much.
Cheers, man. Thank you.
Whenever you want, you come back. Always a pleasure.
Yeah, hopefully let's go with some of the
I really want to do that. I really want to do that. Whenever you have time, I should be much more available in the coming weeks. I basically did my job for the rest of the year, so that should be easier for me. So whenever you can, I'll adapt.
Yeah, no
I'd adapt. Anyway, thank you guys. Sorry if we missed some questions, but I hope everybody enjoyed, and have a good evening, night, afternoon. Doesn't matter where you're living. And take care.
Yeah, take care.